Bandhan Mutual Fund presents MF Corner.
Hello, welcome to Mutual Fund Corner YouTube edition. Thank you so much for tuning in as always. Today what we're going to be discussing is, does it matter if there are lower stocks in a mutual fund? Does it mean that a mutual fund with lower number of stocks performs better? What is the strategy for these fund managers, and how important is it for you as an investor that it matters? To talk to us about that, explain us all of this, we do have Santosh Joseph, who's joining in with us, the CEO at Germinate Investor Service, to talk to us about this. Santosh, thank you so much as always. Let's just start by this, because there are a lot of questions that come in, right? And there's a belief that funds maybe with fewer stocks is something that performs better. One, what's your take on this idea?
Well, this is a raging debate, and there's no easy answer to this. There are funds with 30, 35 stocks, and there are funds with even maybe 150, 200 stocks. I think the answer lies in the portfolio manager's positioning and the portfolio manager's view on the market, or maybe even the subsegment of the market. But I must also, drop in a very interesting quote, which I think can be alluded to Warren Buffett. He said, "Diversification dilutes, whereas concentration compounds." There is, at some level, a certain rigor and robustness to building portfolio where the right size will optimize your returns, where you don't have to worry about too many stocks, or you don't have to worry about too less stocks in the portfolio. So I think this is the debate. It's what is the right amount of stocks that the fund manager decides for the scheme that is optimal. And that there again, it depends on large cap, mid cap, and small cap. Now, I think traditionally it's fair to assume that large caps have the least amount of stocks across the board, whereas small caps across all these schemes have the widest array of stocks, simply because there you have a wide array, you have a bigger universe, and there is so much of action happening there that you don't want to miss out, and therefore more number of stocks get into the portfolio.
Santosh, what is it that then impacts the performance or the risk for both these factors? What would it be that the number of stocks, when would they start impacting your performance or the overall risk that comes in?
So for starters, number of stocks definitely have a direct correlation to the performance of the fund. The reason some portfolio manager will choose a really wide list of stocks is because he doesn't want to miss out on active selection, number one. Number two, he also is trying to ensure that the benchmark returns are captured really well by active selection of weights. Similarly, in an active concentrated portfolio or fewer stocks, here the fund manager is really rooting for strong conviction, lesser stocks, so that every stock that moves up has got a significant and direct impact on the performance of the fund. Now, both of them have their reasons to do so, and I think I largely would go with the fact that more number of stocks are held when you normally feel that it's a little difficult to be concentrated in few positions.
Santosh, like we're talking about, concentrated portfolio versus obviously that concentrated, which is fewer portfolios where our viewers benefit, and diverse portfolio, which means more amount of stocks. Do you think that, is there a trend maybe that is there, that where in a bullish market, one of these performs, like a concentrated portfolio, could perform better than a diverse portfolio? Is that the case? Or even in a bearish market, what is the performance like for both these?
You're right. Both could actually, play a role. There'll be times where in a bullish market, the concentrated portfolio doesn't do well. And in a bearish market, when you're not expecting the markets to do well, the concentrated suddenly springs a surprise because those select couple of stocks do well. So therein lies the challenge. When you're in a concentrated or fewer stocks portfolio, the actual movement of each stock will have a significant bearing. But in a wider list of stocks, you're going to have a more smoother or lesser volatile ride through the market cycles. Now, let me also add something over here which is interesting for us to note, that why do we have this large number of stocks versus less number of stocks is because most portfolio managers have a mandate of a benchmark. You have to benchmark your scheme, number one. Number two, you also want to at least meet, beat, and generate an alpha over the stated benchmark. That is why there is a tendency to have more number of stocks from the benchmark in the portfolio. Now, in a lot of absolute return strategies, that's when you do not have to really be benchmarked for a benchmark that is there, but you want to go and be aggressive and choose limited number of stocks. That's when the concentrated or fewer stocks will hold good. Now, markets is supreme. It can catch you both ways. It's like a double-edged sword. Traditionally, smaller list of stocks are categorized as a lot more conviction oriented, a lot more aggressive, and in a bad market, a lot more punishing, a lot more volatile. Whereas the long list of stocks are generally more smoother, are giving you a more diversified approach. It reduces the standard deviation and gives you a more smoother, homogeneous return over periods of time.
And Santosh, one more thing what I want to understand is, if someone is looking for stability, right, as an investor, what should they be looking at then in this option? Should one go for more concentrated ones or the diverse portfolio? What would be better for some stability in life?
Largely for people who want to be a lot more stable, I think it's better to be in a more diversified list of stocks, maybe slightly longer list of stocks. Now, the argument over here is that when you have a wider list of stocks, even the sharp falls or sharp corrections are captured in an appropriate manner. Now, the argument against this is that when you run a concentrated list of stock, we agree that in a downfall, you feel the pain a lot more. But in the bull market, you capture so much alpha that there's a lot more margin of safety. But when it comes to the question of volatility alone, then one would root for more number of stocks in the portfolio because you are protected on the downside a lot better than just the concentrated portfolio.
Okay, and what would you recommend, or would you recommend actually diversifying across different fronts with varying number of stocks for a normal investor who's just started off?
So this, I think, is a slightly subjective answer. It depends on what category you're choosing. If it's large cap and large and mid cap, or in that kind of concentrated, you got the focus category funds, then I think the concentrated limited bet would work just fine. But if you're doing mid cap, if you're doing small cap, if you're doing small and mid cap, or if you're doing something a little more in the broader markets, I think there you are better off being in a little more diversified or maybe the longer list of stocks in the portfolio. Just let me put this in context. The large cap universe is the top 100 stocks. The small, mid and micro cap universe is fairly large. You have more than a few hundred stocks. For example, the mid cap is about 100, 150 stocks. The small cap is another 100, 200. Whereas the micro cap is the whole universe outside of this. So if you notice that the small cap, mid cap, micro cap, the universe itself is so large, you could afford to have a large list of stocks. So that's why I said my answer for this is going to be very subjective. If one is looking at mid cap, small cap, or a combination thereof, large list of stocks will benefit. If you're going to be large and mid cap or focused, then the lesser number of stocks will work well for you.
Okay, Santosh, thank you so much for joining in with us and explaining us this concept of concentrated portfolio versus diversified as well in terms of the funds that one should look at. Thank you so much for that. It's always a pleasure having you on the show.
Thank you, Vinnii.
Bandhan Mutual Fund presents MF Corner.